Hi, good morning. Welcome to session. Myself Dr.A.Jagadhambal, Assistant Professor, Department of Business Administration, Dr. SNS Rajalakshmi College of Arts and Science. Today we discuss about the cost and management accounting. In that we discuss about the ratio analysis. In that, ratio is a simple arithmetical expression of the relationship of one number to another. That is the simply we called as ratio is the simple arithmetical expression of the relationship of one number to another number. We are the relationship between the one to another. It may be defined as the indicated quotient of two mathematical expressions. So, we called as the ratio is the simple arithmetical expression. It is the relationship between of the two members, one to another member. According to Vixen, Hill and Bedford, the definition of the ratio analysis, a ratio is an expression of a quantitative relationship between two members. That is the according to the Vixen. Ratio analysis is an expression of the quantitative relationship between the two numbers. According to Holler, a ratio is the relation of the amount to another A and B. That is the A and B. Already we discussed about the two numbers relationship. So the ratio relationship of the amount to another A and B expressed as the ratio of A to B, that is called as A is to B. A is to B. Ratio we are, for example, plus we called as addition we called as plus, minus we called as minus symbol. At the same time, the ratio analysis is called as relationship between the one to another number we called as A is to B, that is called as ratio, or a simple fraction, integer, decimal fraction or percentage, that is called as the ratio analysis. In a simple language, ratio is one number expressed in terms of another and can be worked out by dividing one number to in the another number. This quantitative relationship is called as, that is ratio, may be expressed is either of the following ways. We called as ratio analysis is the relationship of one number to another number, and at the same time it is the expression of the quantitative relationship between the two numbers. We called as, we say that it is the ratio is A is to B, it is the called. At the same time it is expressed that A is to B. In that the in proportion in the form of amounts of the two items are being expressed in the common denominator. The example of the form expression is the relationship between the current asset and current liabilities. Their ratio analysis included in the different types. We find that in the proportion, for example, current asset and current liabilities. So we called as 2 is to 1. In that we find that current asset is 2 and liabilities is 1, that is called as 2 is to 1. In that ratio, rate or times or coefficient, quotient obtained by the dividing one item by another item is taken as a unit of expressions. The example is the form is sales divided by the stock. It comes 60, that 6 times is the ratio between the sales and stock. It is important to know that when the ratio is the written in the particular times. At the same time, it is calculated as the percentage, means quotient obtained by the dividing one item by another is multiplied by 100 and it becomes the percentage forms of expressions. For example, the relationship between the gross profit and sales by the expressed as the 25%. So in this session, we clearly discussed about the what is meant by ratio analysis, what is the definition of ratio analysis. Thank you.